every entrepreneur over their lifetime picks up an accountant, an attorney, maybe a couple insurance agents, a banker, maybe an investment advisor. And if you picture all these different professionals like spokes on a wheel, they're usually not all A players. They're not talking to each other. No one's holding them accountable. But the worst part is the entrepreneur sits in the middle of that wheel trying to manage that team of professionals when the entrepreneur doesn't have the time or the expertise in the areas like tax, legal, insurance, and investments. So we call that the financial flat tire, because that lack of coordination and that lack of oversight and that lack of proactivity creates all kinds of problems, mistakes, and missed opportunities. And that's the key of this chapter, really, is fixing that financial flat tire.
Yep, turning the financial flat tire into the functional wealth wheel, as we like to say.
Yep.
And this really is the entire fractional family office model. It's putting someone, the linchpin partner, at the middle or in the middle of that wealth wheel, so then the entrepreneur gets to be outside of the wealth wheel, works directly with the linchpin partner. And this is all modeled based off of the billionaires who have a CEO of their family office.
Yep.
And so it's the exact same playbook, just scaled down to middle market entrepreneurs.
Very true.
Well, let's go through how, as an entrepreneur, we should actually look to build this wealth wheel out around ourselves and some of the different vetting and criteria we should be looking at. And I think the first place we should start is within where oftentimes money is flying over our hands, or really maybe I should say slipping through our fingers, which is when it comes to taxes. Because oftentimes what we see is that entrepreneurs are working with a tax historian, not a tax planner, and they do not have, that's one of the first gaps we oftentimes identify on the broken wealth wheel is the CPA.
Yeah, and that's normal in a lot of situations, because CPAs are paid to file the returns, to tell you what you're supposed to pay in estimated tax payments. Sometimes they're right in that area, sometimes they're wrong. They're not paid for proactively looking at your situation and looking at the tax code and coming up with solutions and opportunities and ways you can pay less in money. And in all my years of working with CPAs, I don't remember CPAs coming to me and saying, hey, here's what we're going to do next year, the year after, and the year after to cut your tax bill down. It's usually looking in the rearview mirror and telling me, okay, here's what you owe. And if you owe more than you thought, congratulations, you did better than you thought last year. And of course, that's not going to help an entrepreneur who's running a business and making a lot of money.
Yep. And when we're looking at that, in the book here, we go through a lot of the different flags and the different things you need to be looking for when you're talking to a CPA. And oftentimes that it's not just about the tax preparation and those that are looking in the rearview mirror, but also some people that get paid success fees. And sometimes they call themselves tax strategists. But that's another thing you got to think through. What is the incentive? If someone is getting paid a percentage of all the tax savings, they're naturally going to push potentially a lot more aggressive strategies. And they're also not only pushing these aggressive strategies so they can make more money, they're pushing all of the audit risk onto you as a taxpayer. Because you may not know this, but when you sign your tax return, that is you verifying the accuracy of every single thing that is on that document, even if you've outsourced the preparation. And a lot of entrepreneurs don't understand that.
Yeah, and sometimes these organizations will say that they have audit protection, but who knows if they're going to be in business when you get audited, and who knows if they're actually going to support you or not. That's a big question. Yeah, you have to look out for those red flags on tax planning. On the other hand, you don't want to ignore it, because there's so many opportunities in the tax code for small business owners. The tax code was created for small business owners to help you and I and other small business owners save on taxes so that we can build our company, hire more people, drive the economy. All of that stuff happens, and that's in the tax code. It's built that way.